All right, traders, get ready, because today we're going deep on price action.
Oh,
We're
yeah.
going to be diving into Price Action Trading Secrets by Rainer Teo.
Love that book.
You want to learn how to read the markets?
Absolutely.
Ditch those lagging indicators. This is the deep dive for you.
You know it. Teo's book really emphasizes these kind of core principles. He calls them the natural laws of trading success.
Okay, the natural laws. I like it. So,
Uh-huh.
what are we talking about here?
Well, he breaks it down into four parts. You got consistency, having an edge, risk management, and compounding gains.
So it's not just about, finding a hot stock tip and YOLOing all your money, right?
No, not at all. It's about building a sustainable approach, one that can weather the storms
All
because
right.
the market, it's going to throw you curveballs.
Oh, for sure.
But if you've got these principles down, you're much better equipped to handle it.
Makes sense.
Yes.
So how does price action fit into all of this?
Price action is everything. It's the purest form of market data. You're looking at the direct buying and selling pressure. No lag, no fluff.
Okay, so we're ditching the indicators. We're focusing on price.
Exactly.
And what about the news? I mean, isn't that important too?
Teo actually says to ignore the news.
What?
Yeah, because by the time the news hits, it's already priced in. Traders have already processed it, reacted to it.
So it's like trying to catch a train that's already left the station.
Precisely. The price action tells the story.
All right, so how do we start reading this story?
Well, Teo talks about this concept of market structure.
Okay, market structure. Break that down for me.
Basically, he divides market movement into four stages: accumulation, advancing, distribution, and declining.
Okay, 4 stages. So what's happening during accumulation?
Accumulation, that's like the calm before the storm.
Yeah.
It's where a downtrend is losing steam, buyers start dipping their toes back in, potentially leading to an upswing.
Gotcha. So it's like the market's taking a breath before the next move.
Exactly. Then we've got the advancing stage, which is your classic uptrend, higher highs, higher lows. Bulls are in control.
Right, the good times.
But like all good things, they don't last forever.
Yeah, unfortunately.
That's where distribution comes in.
Distribution. Okay, so what's happening there?
Distribution's kind of like a tug of war between buyers and sellers. The market starts to consolidate after that big run-up. Might see a reversal coming.
Interesting. So it's like the market's deciding which way to go next.
Exactly.
And finally, we've got the declining stage.
Yeah, declining, that's your downtrend. Sellers are in charge. Prices are making those lower lows.
Okay, so we've got these 4 stages: accumulation, advancing, distribution, declining.
Yeah.
But how does a trader actually use this information?
Well, think of it like, watching a movie.
Okay,
You can kind of predict what's going to happen next based on the clues you've picked up along the way, right?
makes sense.
Market structure gives you those clues about the market's potential direction.
So for example, if you see a market that's in that distribution phase,
Yeah.
you might be a little hesitant to buy, right?
Exactly. You might even start looking for shorting opportunities if you think a downtrend's on the horizon.
Makes sense. It's like getting a sneak peek at the market script.
That's a great way to put it. And speaking of scripts, to really understand what's going on, you got to know where the major battles are taking place.
All right, the battles. I like where this is going.
Yeah, we're talking about support and resistance levels.
Support and resistance.
Yes.
Every trader's got to know these, right?
Absolutely. These are the battle lines where buyers and sellers are duking it out.
Okay, so support, that's like the floor, right?
Yeah, the floor where buying pressure is strong enough to prevent the price from dropping further.
And resistance is the ceiling.
Right, where selling pressure prevents the price from rising any higher.
Makes sense.
Hmm.
But Teo emphasizes that these are zones, not exact lines.
Mm.
Why is that so important?
Because in the real world, in real-time trading, the price is rarely going to hit those specific levels perfectly.
Okay, so it's more about understanding the areas where these forces are likely to collide.
Exactly. Think of it like a battlefield, right? The front lines might shift a bit, but the general area of conflict remains the same.
That's a great analogy. So we're not looking for precise price points.
Well-
We're looking for those zones where the action is likely to happen.
Exactly.
Okay, so how do we figure out how strong these zones are? I mean, some battles are bigger than others, right?
Absolutely. Some support and resistance levels are stronger than others.
So how do we know which ones to focus on?
There are a few clues. One is the frequency of testing.
The more times it's been tested,
Exactly.
the stronger it is.
Yeah. And then there's this concept of role reversal.
Role reversal. Okay, what's that all about?
So basically, support can turn into resistance and vice versa.
Whoa, wait, what? How does that work?
Let's say you've got a support level that finally gets broken after, multiple attempts.
So the buyers get overwhelmed and the sellers break through.
Right. That can trigger a wave of selling as those who bought at that support level now face losses.
And suddenly that support level becomes resistance.
Exactly. The level that was once a floor, it's now a ceiling.
Wow, it's like the market has a memory.
Yeah, kind of like that.
Yeah.
And the same thing can happen in reverse. A broken resistance level can become support.
So we're looking for these key levels and paying attention to how the price is interacting with them.
Exactly.
But how do we actually read those interactions? How do we understand the price action itself?
Well, that's where candlestick patterns come in.
Ah, candlestick patterns.
Yeah, they're like visual clues.
Okay.
They give us insights into the balance of power between those buyers and sellers.
Gotcha. So like, what are some examples?
Well, Teo focuses on reversal patterns, like the hammer pattern, the shooting star, the engulfing pattern.
Okay, the hammer, the shooting star. I've heard of those. What do they tell us?
The hammer, with its long lower shadow, often suggests a potential bullish reversal after a downtrend.
So, like the market's testing the downside, but it finds strong support.
Exactly. And the shooting star, well, that one's got a small body and a long upper shadow, and that might signal a bearish reversal after an uptrend.
Right, so it's like the market's trying to push higher, but it hits resistance and it fizzles out.
Precisely. And then you've got those engulfing patterns where one candle completely engulfs the previous one.
So that's like a big power shift.
Yeah, it could signal that the balance of power is shifting between buyers and sellers.
Okay, so we're looking for these patterns to get a sense of where the market might be headed. But Teo also warns against relying solely on candlestick patterns, right?
Oh, yeah, absolutely. They're valuable clues, but you got to consider the context.
The bigger picture.
Exactly. A hammer pattern in the middle of a strong uptrend might not mean much, but after a prolonged downtrend, it could be a powerful signal.
Right, so it's like trying to interpret a single word without understanding the whole sentence.
That's a great way to put it. You need to see the whole picture to really understand what's going on.
So we've got market structure, we've got support and resistance, we've got candlestick patterns,
Yep.
a lot to consider. But there's one more crucial piece of the puzzle, right?
Oh, yeah, risk and trade management.
Risk and trade management. Let's dig into that in the next part of our deep dive.
Welcome back, everyone. Ready to put some of this price action knowledge into action?
Absolutely. Let's talk setups, strategies, the good stuff. How do we actually spot these trading opportunities using price action?
Well, one way is to combine what we know about market structure with those candlestick patterns we discussed. Let's say you see a market transitioning from that advancing stage, that uptrend, into distribution.
So the market's kind of lost its steam a bit.
Yeah, exactly. That's when you start looking for those bearish reversal patterns, like maybe a shooting star, a bearish engulfing pattern near a resistance level. Could be a sign that a shorting opportunity is brewing.
I like it. It's like we're piecing together a puzzle, right?
Right.
We got market structure, price levels, candlestick patterns.
You've got it. It's all about confirmation.
Confirmation.
Yeah.
So you're not just jumping in based on one little clue.
Exactly. You want to see multiple factors lining up supporting your trading decision.
Okay, so we've spotted a potential setup. We've got confirmation. What about entries and exits? Price action doesn't give us exact price points, does it?
That's where your understanding of support and resistance comes in. You can use those levels as potential entry and exit points. Like, say you're looking to buy in an uptrend, you might wait for a pullback to a support level before you jump in.
So it's like waiting for a sale, right? You don't buy at the peak price, you wait for a little dip.
Precisely. And for exits, support and resistance can be your guide too. If you're in a long trade, you could set your profit target near a resistance level, and then your stop loss order goes below that recent support level.
Okay, so we're defining our risk and reward before we even enter the trade. Love it. But what if the breakout's a fake out? How do we avoid those traps?
Ugh, the dreaded fake out. Yeah, not all breakouts are created equal. Some are just those flashy fireworks that fizzle out quickly. To avoid getting caught in those, look for confirmation from other price action signals.
So it's like double checking your map before you head out on a road trip, right? You want to make sure you're going in the right direction. What kind of confirmation are we looking for?
You could look for candlestick patterns that support the breakout, like maybe a bullish engulfing pattern after a breakout above a downtrend line. Or you could even wait for a retest of that broken trend line.
A retest, what's that?
It's when the price kind of dips back down to the broken trend line before continuing in the direction of the breakout. Think of it like the market just double-checking to make sure it's got enough support to keep moving forward.
Okay, so it's like the market's taking us a step back to make sure it can take 2 steps forward. Got it. But trendline breakouts, those aren't the only price action setups out there, right?
Oh, not at all. We've also got the support and resistance bounce. This strategy leverages those established support and resistance levels we talked about earlier.
Right, the battle lines. So how do you trade these bounces? Seems a little risky if you're not careful.
It can be, but if you approach it the right way, it can be really effective. Let's say you've spotted a strong support level. You wait for the price to pull back to that level and look for bullish reversal patterns, like a hammer, a bullish engulfing pattern, as confirmation.
So you're looking for those signs of buying pressure coming back in at that support level.
Exactly. And once you see those signals, you might enter a long trade, set your stop loss just below that support level.
Got it. And for profit targets.
You could aim for the next resistance level or even use a trailing stop loss to lock in those profits as the price moves in your favor. Let those profits run.
All right, so it's like playing ping pong with the market. Buying at support, selling at resistance. Sounds fun, but is it really that simple?
Well, there's definitely more to it than that. Remember, not all support and resistance levels are equal.
Right, some battles are more intense than others.
Exactly. Some levels are just stronger than others. It depends on things like how many times they've been tested, the volume associated with those tests.
So you say it's like those old castles, right?
Bravo.
Some are just ruins, and some are like impenetrable fortresses.
That's a great analogy. You want to trade those strong levels, the ones that are likely to hold.
So it's about knowing your history, recognizing those key levels, and then using price action to confirm your trades.
Exactly.
But we've been talking a lot about the technical side of things. What about the mental game?
The mental game. That's often the most overlooked aspect of trading.
Yeah, because trading can be an emotional roller coaster, right?
Absolutely. You're going to face losses. You're going to face unexpected market moves.
And it's easy to get caught up in those emotions.
Oh, for sure. That's why it's so important to have a strong trading mindset. It's about managing your emotions, staying disciplined, and focusing on the process rather than the outcome of those individual trades.
Okay, so it's not about getting too high with the wins or too low with the losses. It's about staying even-keeled.
Exactly. And that takes practice, self-awareness, understanding your strengths and weaknesses as a trader.
So it's kind of like training for a marathon, right?
That's a great analogy.
You need to build up that mental and physical stamina.
Exactly. Because there will be moments when you feel like giving up, but those are the moments that really test your character as a trader.
That's when you got to dig deep and push through.
Exactly. Trust the process. Stay committed to your plan.
So it's not just about mastering the technical aspects of price action trading. It's about having that winning mindset to handle all the ups and downs of the market.
Couldn't have said it better myself.
All right, I'm ready to take this to the next level. Let's dive into specific price action setups and strategies. Okay, time to put it all together. We talked concepts, we talked strategies. Now let's get specific. Let's talk setups.
All right, let's do it. But remember, these are just examples. You got to adapt these ideas to your own trading style. Your risk tolerance, all that good stuff.
Right. We're giving you the tools, but you got to build your own trading masterpiece.
Exactly.
So let's start with a classic, the trend line breakout.
Yes. The trend line breakout. A sign that the market might be ready to shift gears, break out of that range.
So it's like the market's breaking free from those constraints, ready to make a big move.
Exactly.
But how do you identify a valid trend line breakout? There's a lot of lines you can draw on a chart. It can get kind of messy.
Oh, yeah, for sure. Not all trend lines are created equal. You want to focus on the ones that connect those significant swing highs and swing lows, the points where the price actually reversed direction.
Okay, so it's like a support or resistance level, but it's angled.
Right. It's reflecting the direction of that trend. And when the price breaks through that trend line, with some conviction,
That's our signal.
that's a potential signal. Often you'll see that volume increasing, confirming that move.
Okay, so we're not talking about a little wiggle above the trend line. We're talking about a decisive move.
A decisive move, yeah.
Got it. So let's say we see that breakout. What happens next? How do we actually trade it?
Well, once that breakout happens, you could use that broken trend line as your entry point. Like for a bullish breakout, you might buy a little bit above that breakout point and your stop loss order goes below the trend line.
So you're using that broken trend line as kind of a safety net. I like it.
Yeah.
What about profit targets?
Well, you could target those previous swing highs or other significant price levels. You could even use a trailing stop loss to lock in some profits as that price moves in your favor.
So you can ride that wave, potentially. Love it. But what if that breakout's a fake out? How do we avoid getting tricked?
The fake outs. Yeah, they happen. Not all breakouts are genuine. Some are just, like a head fake.
A head fake, okay.
Yeah, a false breakout. And to avoid getting caught in those, You look for confirmation.
Confirmation. Okay, so what are we looking for?
Maybe look for candlestick patterns that support that breakout, like a bullish engulfing pattern after a breakout above a downtrend line. Or you could wait for a retest of that broken trend line.
A retest, what's that?
A retest is when the price kind of comes back down to that broken trend line, just to test it again before continuing in the direction of the breakout.
So it's like the market's just making sure it has enough support to keep moving higher.
Exactly. A successful retest, that gives you more confirmation that the breakout's the real deal.
Got it. So we're looking for those extra clues to confirm the breakout. Makes sense. But trendline breakouts, those aren't the only price action setups, right?
Oh, no. There's a lot more out there. Another one is the support and resistance bounce.
Right, the support and resistance bounce. We talked about those levels being like battle lines.
Yeah, exactly.
So how do we trade these bounces? Seems a little, I don't know, a little dangerous if you're not careful.
It can be, but with the right approach, it can be pretty powerful. Let's say you found a strong support level. You could wait for the price to pull back to that level and then look for bullish reversal patterns, like a hammer, a bullish engulfing pattern.
Okay, so you're looking for those signs that the buyers are stepping back in.
Exactly. And once you see those signals, you might enter a long trade. Set your stop loss just below that support level.
Got it. And then for profit targets.
You could target that next resistance level. Or you could use a trailing stop loss, to capture as much of that upward move as possible.
Right, so it's kind of like playing ping pong with the market. Buying a support, selling a resistance, riding those bounces.
Yeah, kind of like that. But remember, not all support and resistance levels are created equal.
Right. Some are stronger than others.
Exactly.
So you're saying it's kind of like those old castles, right? Some are just ruins. Some are like impenetrable fortresses.
Yeah, that's a good way to think about it.
Yeah.
You want to trade those strong levels, the ones that are likely to hold.
So it's about knowing your history, recognizing those key levels, and then using price action to confirm your trades.
Exactly.
But, we've talked a lot about the technical side of price action. What about the mental game? That's got to be important too.
Absolutely. The mental game, that's often the most overlooked part of trading.
Because it's tough, right? It's an emotional roller coaster.
You're going to face losses. You're going to have unexpected market moves. It can be really challenging.
And it's easy to let those emotions get the best of you.
Oh, for sure. That's why developing a strong trading mindset is so important. Managing your emotions, staying disciplined, really focusing on the process rather than the outcome of each individual trade.
So it's not about getting too high with the wins or too low with the losses. It's about staying level-headed.
Exactly. And that takes practice, self-awareness, really understanding your strengths and weaknesses as a trader.
So it's like you're training for a marathon.
Exactly.
They got to build up that mental and physical endurance.
Because there will be moments when you just want to quit. But those moments, those are the ones that really test your character as a trader.
That's when you got to dig deep and push through.
Trust the process.
Trust the process. All right, so we've talked about technical side. We've talked about the mental game.
Yeah.
Any final thoughts for our listeners before we wrap things up?
Just remember that trading is a journey. It's not a get-rich-quick scheme. It takes time, it takes effort, it takes dedication.
And continuous learning, right?
Absolutely. The market's always evolving, so you got to evolve with it.
Well said. This deep dive has been a fantastic exploration of price action trading. We've gone from those basic concepts to some pretty advanced techniques. We talked about the importance of mindset.
Yeah, we've learned a lot. We've learned how to read the market's language, how to spot those high probability setups, how to manage our risk effectively.
We've learned how to develop a disciplined and consistent approach to trading. But this is really just the beginning. Keep exploring, keep refining your skills, never stop learning.
The market rewards those who are prepared.
Absolutely. Well, on that note, it's time for us to sign off. Thanks for joining us on this deep dive into the world of price action trading.
It's been a pleasure.
And to all you traders out there, remember to trade responsibly, manage your risk, and most importantly, never stop learning. Until next time, happy trading.